So now we need to figure out how to pay less taxes. And today I want to walk through personal income tax, the 1040 federal income tax return. Okay, I'm on irs.gov, but for this purpose, I'm going to jump now to the 1040. This is personal tax return. And then they'll begin to ask you about your income. Right here, we have the W-2 income. Now, in our case with Joe, we are assuming for one, his wife is stay at home. And for two, he has an S corporation. So as an S Corp, you're paying yourself a reasonable salary. In this case, we're saying it's $50,000. His total profit for the business was $150,000. $100,000 distribution. Even if he doesn't take the distribution, you still are paying tax on that profit, and then the $50,000 compensation for salary. Now, this is a little aggressive when you're talking about what's reasonable compensation and what the split is. If you're 50-50, if it was like $75,000 salary and $75,000 profit distribution, it's a little safer, but actually this is still quite reasonable and generally should be okay. But moving down, in this case, he doesn't have this other kind of income. Maybe you do, depending on your situation. Interest, dividends, Social Security benefits if you're retired. So next we have Schedule D. This is your capital gain and losses. Actually, if you're a collector and investor, this is where you report your sale of collectibles. But in this case, we're looking at stocks. So let's say Joe had a bad year and he made a loss of say $5,000. Well, you have a limit of $3,000 that you can deduct from your W-2 and your S corporation profit. So when you add up 50, -3, 100, your total income is $147,000. In this case, we don't have adjustments on Schedule 1. If you were a sole proprietor with Schedule C, you would have your self-employment tax, your health insurance, that will come off here.